back with first trades, and the first trades are slowly beginning to inch up. So just about 10 points, and we should make it back to that 10,500 mark, at least for the Nifty futures, and a good market breadth at your hands is what you have. But let's bring on board the Sunteck Realty. It's been a great outperformer this entire year gone by. So let's try and understand whether there's merit that the stock may actually perform even in 2018. What are their growth plans? They've got a strong response for their Oshiwara district center in Goregaon in the region of Mumbai. So let's try and understand and get in all those details. Kamal Khetan, the chairman and MD director at Sunteck Realty, joins us on the show right now. Kamal, hi, good morning. Tell us a little bit more about your development potential at the Goregaon land bank of about 2 million square feet. What is it that you're planning to do there?
Hi, good morning. So the development potential at Goregaon, so just to explain you just a little bit, the next big capital allocation for Sunteck, in fact, after BKC, had happened at ODC, that is Oshiwara District Center, Goregaon, and which is ODC is planned and being developed by, in fact, MMRDA, the same planning authority which developed BKC. With the research, in fact, Sunteck could identify this location, which was selling at discounted price to the neighborhood areas like Goregaon East and Lokhandwala West, if you see that. And the location is today the back office and mid office hub of Mumbai, with corporate parks like Nirlawn, North Knowledge Park, Nesco, and Infinity Parks in and around it. However, currently there is a very limited supply now in that micro market for the office space, and around these suburbs, along the declining vacancy rates of the office space, simultaneously with the connectivity and the infrastructure at this location improving significantly, we believe it will provide a big opportunity for Sunteck to create a good annuity income portfolio. We have an entire 23 acres of land parcel in this location, out of which, in fact, almost we'll be developing almost 6 million square feet, out of which 2.6 million square feet will be commercial and the retail, which will be like 5th and 6th Avenue. And the ongoing rentals in this location in the vicinity is close to rupees 140 to 150 rupees per square feet, which translates almost to 450 to 500 crores of annuity income for Sunteck, and which can take the company to the next level. And Avenue 1, 2, 3 and 4 will be like total 3.6 million square feet of the residential.
Okay, you have raised, Mr. Khetan, almost 500 crores via the QIP route for entry into mid-income housing segment and expansion, etc. Now that fundraising activity is complete, give us more details on how you propose to deploy that money.
So we got a very good response for the QIP. It was very heavily subscribed. So we raised 500 crores from the QIP, and 150 crore rupees were bought in by the promoters as a preferential issue. So total capital infusion in the company was 650 crore. And we got a good response from all the foreign institutional investor as well as the domestic institutional investor. With well-capitalized balance sheet, obviously, and the strong sustainable growth, we want to deploy this capital, obviously, to grow the company. Commercial, what we are looking at right now is 2.6 million square feet, where we want to put most of the capital and create the rental portfolio. And whereas in the mid-income value homes, obviously, we are looking at the western suburbs. And that obviously there are a lot of distressed opportunities which is there in the market. So all these three things which will take the company, we feel, to the next level: commercial, as well as the mid-income value homes, and plus the distressed assets which are available in the market.
You've stated that your target is to double annual new sales to about 1,200 to 1,500 crores over the next 5 years. How achievable do you think is it in the current market environment where the market seems to have an oversupply?
We are very confident. If you see, post, in fact, demonetisation, RERA and GST over the last 1 year, in fact, it has proven to be the boon for the organized and the branded developer. This has led, in fact, to the increased transparency, giving more confidence to the customer, and organized and for the branded developers like Sunteck. Even if overall market size might have shrunk slightly, but the market share gains by the developers for all the organized developers have been disproportionately higher, if you see. And even if overall market remains subdued, if you see the micro markets where we are operating, especially in BKC and ODC, and the Sunteck track record of identifying such location ahead of time, will definitely keep us much isolated from the with the subdued market. And simultaneously, if you see now the housing, where we are looking at entering into the mid-income housing space, where government is also bringing in various measures like credit-linked subsidy scheme, infrastructure status for the sector, which will definitely support, and we definitely don't see the growth getting hampered due to any other reason.
Okay, so tell me, what are the current debt levels in your company, and what is it that you have by way of a debt reduction plan going forward?
So if you incorporate the impact of QIP and the promoter preference share in the balance sheet, the net debt level has in fact reduced to almost 0.13x, which is, I believe, amongst the lowest in the industry today. Our peak net debt level to the equity will always be lower than 0.5x, what we believe, and which we will always determine by the cash flows, and we'll definitely use our strong balance sheet to grow the company from here. That's what our plan is in terms of debt. We don't want to over leverage ourselves.
Tell us more about some of your individual projects, especially your project in Dubai. What is the status in that front, and when can we expect revenues to start flowing in?
So we continue to focus in MMR region, and if you see, our maximum investment has always been in MMR region. So 80 to 90% of the economic interest of Sunteck has always been in Mumbai or MMR region. And only if you see the track record, only 10 to 20% of the capital has gone outside Mumbai, which is only opportunistically on JV-JD model, which definitely also gives the opportunity to spread the risk for Sunteck, and this also gives exposure to other micro market. As far as monetization, we are looking to monetize from this Dubai project over a period of 3 to 4 years.
Right. Give us your targeted margin trajectory going forward. Typically, mid to lower income housing are margin dilutive. How will you assuage analyst concerns on that front?
If you see, Sunteck has a track record. In fact, we are giving a EBITDA of almost 30 to 35%, and the PAT margins for Sunteck is 20-25%, which is among the highest in the industry. Definitely, since we are looking at getting into this segment, which is low margin segment, we feel will mitigate the risk of lower margin. Is why? Because we continue to feel that we'll be able to maintain the PAT margins, because this project will be tax free due to the infrastructure status. So our PAT margins should not get affected, and to take precautions, because due to any market circumstances, we are looking to mitigate further risk by planning to enter this segment by getting into JV-JD model, so that our capital blocked is minimal and ROE is not compromised.
Okay. Lastly, 26% of your BKC project inventory was still vacant the last time we checked. What kind of response is it that you're seeing on that front?
So if you see, during the last quarter, we saw the pricing increase, in fact, by almost 15 to 20% at our BKC projects. We sold apartment in Signature Island. In fact, the main BKC project, there are three obviously BKC projects: Signature Island, Signia Isle, and Signia Pearl. Out of which the last quarter we sold a apartment in Signature Island at a price as high as 61,000 rupees a square feet. On all the three BKC projects today put together, we have an inventory close to 20-25%. Obviously, we look to dilute this inventory. We have been maintaining this, that we look to dilute this inventory over a period of 3 to 4 years. And today, in fact, all the three projects have occupation certificate in hand. The entire complex is habitable now, and we are seeing more and more traction, because people are coming and staying now. More and more people coming, more and more habitation happening. We see the sales traction growing from here. And if you see the BKC, which is the CBD of today, not only Mumbai, it is like a CBD for the country today. Over the next 2 to 3 years, which will increase the more attractiveness because of the convention center, what are things which are happening in the BKC, the convention center which is coming up, commercial space, almost 4 to 5 millions of commercial space will be more occupied, new flyovers and connectivity getting connected to BKC, and some few new 5-star hotels and the new high-end malls which are coming up, that will increase the traction in BKC, and the residential demand we feel from here will further go up in BKC.
All right, Mr. Khetan, thanks very much for joining us, giving us those details about your business. We wish you the very best for the future. Meanwhile, for the index, you have the Nifty at about 0.5% higher, but nudging towards fresh record highs. In fact,